we have the current stock market update for Intel Corporation, stock ticker INTC. Before we begin with today's chart analysis, if you find these educational materials to be helpful, please remember to click the like and subscribe buttons and leave your thoughts below in the comments section so that other traders can find this information more easily on the platform. So what we can see here is the a bit of an hourly price chart, but Intel did just report earnings, so we should sort of go over quickly what did occur there. The stock is moving a bit higher here so far today. Earnings per share, the adjusted EPS figure came in at 17 cents. Expectations were calling for a loss of 2 cents, so this is a fairly significant turnaround here. On the revenue side, we did see figures come in at 13.28 billion. Expectations that slightly beat expectations, 13.02 billion. For the fourth quarter adjusted earnings, the guidance was a big factor here. There is sort of a more positive outlook here in this. The major question at this point is whether or not this turnaround story really has legs or not, or are we just in store for this kind of extended period of prolonged weakness and things like that. And one of the reasons that we are seeing share prices move higher today does come from the fact that the guidance figure was a bit encouraging. So we did see the EPS beat, but that guidance number is also very important here. So for the fiscal fourth quarter, adjusted EPS is expected to come in at 12 cents per share. The revenue range is expected to come in between 13.3 and 14.3 billion. So this does surpass the prior estimates, which were calling for 8 cents in adjusted EPS and 13.66 billion in revenue. So these are encouraging figures, and it does suggest that possibly from an operational perspective, the company might be, looking at a bit of a bottom here. So overall, the market is responding favorably. We are seeing share prices sort of spike higher here. And this was a bit of a concern because, this prior support level was really coming under a lot of pressure. Really what we were looking at here, it's not really this 22 figure. That's a bit of an earlier video that I was looking at that price zone. But for the most part, we were really looking at this 2158 area as a potential, triple bottom, really a quadruple bottom. If you look at these price tests here previously, so 1, 2, 3, and then even a fourth price test here. So, we were watching this area very closely here because previously it was a triple bottom and then it was turning into a quadruple bottom. And in many cases, if you don't see evidence for a turnaround at that point, that area can look as though it's going to start to break. If we continue to see downside pressure there, and that was starting to occur, but fortunately, this earnings figure did come out in a positive way with the EPS number and the forward guidance. And right now, we're starting to head back into resistance zones, which came in right around here. So this current price level, right around 2340, would be the price zone. So at the moment, this is the top side to watch, and what we're starting to see develop here, is a bit of a sideways trading range. I mean, that had sort of been in place previously, so not a huge development here. What we would really like to see would be for share prices to convincingly break above this 2340 area, and that does then signal that a very substantial bottom would then be in place right around this quadruple bottom area, right around 2160. It's not an exact number, but that would be the rough average that we would be looking at in terms of the downside support zone. So currently we should, before we close the video, we should look at the indicator readings here because what we're starting to see is the potential for a break in this downside momentum that we have been seeing. So that would be this trend line here and the relative strength index. And, we did sort of see a failure here currently, just as we're running into that range resistance at 2340. So not totally surprising that we're getting a bit of a failure here, but the best case scenario at this point would be for share prices to break above here. Even moving into overbought territory would be okay at that point. So what that would accomplish at that point would be a break of this momentum reading, and then that would suggest that overall this is a trend, a negative trend, bearish trend, which would no longer be influencing share prices. So that would be a positive development, even if we are moving into overbought territory at that point. So currently, as far as the positive momentum is concerned, I would be comfortable, getting into the possibility here that this was a false breakout to the downside that we were seeing. We really didn't see a convincing break of that 2160 support zone. So the fact that we have bounced so sharply off of this uptrend line here does sort of suggest that this really could be a false breakout. What I would like to see in terms of confirmation of this assessment would be for the relative strength index reading to then break through its downtrend line and move into overbought territory. Strange as that might sound, in some cases, you actually do want to see things moving into overbought territory, because in this case, it would accomplish a couple of different things. I mean, not only do you sort of lose this downtrend in momentum, but you also, if we look back on the price chart here, you also sort of lose this range top resistance. And this has been a formidable resistance level. I mean, we did see share prices move into 2380 previously, and then we did see a bit of a failure here. And then this range was really starting to look very heavy. I mean, it wasn't clear that this was actually going to hold up. And, but then we did get this earnings report, and it is positive enough. And I think that the forward guidance figure is really the issue. I mean, if they had come out with a negative forward guidance, I mean, I think they could have, I think they could have beaten EPS and still seen the share price move lower if there was evidence of some weakness in the forward guidance figure. So that didn't really happen. And, the main question at this point is whether or not the stock has found a bottom. Like how many operational concerns are we going to be running into in the future? And there are some, serious, legitimate questions here. And on this channel, I have even called for the resignation of Pat Gelsinger. I mean, there's just a lot. There's a lot of share price destruction that has gone on throughout his tenure. I mean, it's not even just this prior price movement. I mean, there have been substantial declines in this stock, for quite a while. This is all under his tenure. So, we're trying to look for a bottom here. We're trying to look for a reversal point. And this is a company that has a lot of government support. I mean, it's an essential company. The United States does need to be able to produce its own processors. I mean, it seems strange that I would even need to say that, but it's true. And, Intel, is in that position, and they're receiving a lot of government money. And, I'm not really sure why more people haven't called for his resignation. So overall, this is a positive result here. We are seeing some upside price movement. I would really like to see share prices break above this 2340 area and possibly close there today, because that would also give us a weekly close above that area. And then if that were to occur, that would then signify a major bottom right around 2160. So here's the current market update for Intel Corporation, stock ticker INTC. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.